Hey guys, how are you? Andy Super Founder, CEO Y2K Credit Solutions. So listen, it's not old news. We all are aware that rates have gone up in the mortgage world. Federal Reserve has raised their rates on the banks. Now, a recession is coming. And a lot of clients are asking me, how do I maintain my credit? What do I do in a recession? Especially if you went through the Y2K program, you have a new clean slate credit report, you have credit cards, you know, 750 scores, trying to maintain your credit, right? So first off, let's understand this. If Federal Reserve rate raises their rate, every single rate's going up. Mortgage rates going up, credit card rates are going up, auto loan rates are going up. Everything that has an interest rate is going to go up because it costs more to buy money, right? Now, a lot of people are saying, even if you have a 720 credit score, that doesn't mean anything in this market right now. That's not necessarily true, because they're still using your credit to approve you for your mortgage, your credit card, your auto loans, or whatever financial obligations or whatever you're trying to finance. They're still gonna pull your credit, right? 720 may not be the ideal elite credit score no more. It may, I think right now we're at a 760 or 770, which is considered to be elite credit score. I'll have to check back that number for you. I know it was 740 a couple months back, and that raised. So I think it's 760 or 780. So your credit score is still gonna play a major part in what interest rate you're gonna get, okay, on whatever you're trying to finance. So, that myth about, credit score doesn't mean anything, that's not necessarily true. But let's get back to how we maintain our credit. So in the recession coming, obviously, we want to scale back. We don't want to spend as much money. We want to save, right? We want to have rainy days, and you want to make sure you have 6 months of rainy days. Here's what you do. Let's say you have 3 credit cards. Keep the utilization under 15% for all 3 credit cards. Do not go over that, right? You have to budget your spending. You have to know what you're gonna afford a month. You have to know what comes in from payroll, from your, and what you're pushing out in expense every month. So you have to check some balances, right? So you want to maintain your credit score. You want to make sure that you're able to pay your credit cards. You want to make sure that you're not maxing out your credit cards. And when the recession actually hits, when we're in the eye of the recession, in the middle of this recession, you're not stuck. And we know the recession is coming. It started already. It's probably going to hit towards the end of the year, right? So we have some time to prepare for that. So what that means is that if you have high credit card balances now, and you have 6 months of savings and some excess cash, start paying those credit cards off now. Start doing it now. And also, if you have one that has a 8% interest, APR 8%, and you have one that has a 10% and one that has a 6%, try to pay off the one that has the highest interest rate first. And if you can zero it out, that'll be great. If you can't zero it out, keep it under 15%. Once you pay that off, while you're paying the one with the high interest rate, you're gonna make the minimum payments, or a little more than the minimum on the other 2, until you get the one with the high interest rate down to 15%. Then you're gonna move on to the next account. Let's say that's the one that has 8%. You're gonna work on bringing that down either to 0 balance or 15%, while you're making minimum payments on the smallest interest rate credit card, or a little more than minimum. All right. The point of what I'm trying to tell you is that don't wait for the recession, the eye of the recession, try to pay the card up when you don't have the cash, because what's gonna happen, you're gonna start making monthly minimum payments, and majority of that payment is gonna go to interest towards the credit card. So you're basically you're putting minimal on principal, right? So let's say the monthly payment is $25. $20 is going to go to interest, $5 is going to go to principal. After 6 months of being in that cycle, the bank is going to start cutting your credit limit in half. Obviously, they don't want to be exposed because they don't want to lose money. They don't want to extend too much credit to you because of your payment pattern and your payment history. All right, so it's rates are going now. We all know it's all over the news, social media, everything. Everyone's talking about it, right? We knew it was coming. We knew it was coming since last year, but yet people were saying, oh no, it's not coming, spend money, buy this, buy that. That's how people make their money, by selling you propaganda. So take your credit cards, put an Excel sheet, get the most recent statement, see which one has the highest interest rate, put that in there, then put a monthly payment plan together, pay them off now, and start chopping away at them. Don't wait until the recession actually hits when you're stuck, because then you're gonna lose those credit cards. The credit limit is gonna get cut by the bank in half. Let's say you have $5,000 credit limit, they'll drop you down to $2,500. As you pay the card off, they'll drop you down to $1,500. And I see that happen over time over time. So it is gonna happen. I'm telling you, it's gonna happen. So just make sure you're budgeting now for the recession, and you want to maintain your credit, and that's how you're going to maintain your credit score, maintain your relationship with the banks, and not burn bridges. All right, if you have any questions about this video, leave a comment below and I'll get back to you guys about it. Also, before I go, if you do need help putting all these bills into a spreadsheet, we have a program called Y2K 2.0 where we put all your bills into the statement. We tell you how much you can put into this credit card, how much you can put into savings, etc., etc. So if you're not able to do this on your own, definitely give us a call, schedule a consultation, and we can assist you for that. Again, that's not a free program either. There's a cost for it, but it's minimal, and we can put the whole thing in the Excel sheet, and it will tell you exactly what to do, when to do, how to do, etc. All right? If you have any questions, leave a comment below, and I'll talk to you guys soon.